Good afternoon to the audience, and many thanks to the ACT for congregating us all together for the most important event in the calendar for the corporate treasury community. Today, I have the pleasure of moderating Treasury Lab number 3, how to build a cost-efficient treasury centered around automation, with a specific focus on centralization versus decentralized models. My name is Husam Basaddiq, and I am the director for trading at Refinitiv, now a London Stock Exchange company for the Middle East and Africa, and have been with the organization for 8 years plus, and had my previous life at Barclays on the global markets FX sales desk, covering corporates in the region. We as an organization work closely with banks and corporates in providing enablement solutions, either market data to make informed choices, and execution workflow solutions that seem to be centered a lot nowadays with automation, centralization of corporate treasury requirements that operate within multiple jurisdictions or across multiple business units. Joining us today on the panel, we have a wealth of experience from the market. We have Mr. Vineet Gupta, Group Treasury Manager at Dahra Group, and Naresh Agrawal, the Associate Director of Policy at the ACT. Gentlemen, thank you so much for joining us today, and I'm sure the audience would appreciate if you can introduce yourselves and your career journey so far. And maybe we can start with you, Mr. Vineet.
Thanks, Husam, and good afternoon, everyone. Myself, Vineet Gupta. Currently, I am working with Dahra Agriculture at holding level. In terms of my career, have around 17 years of experience. Most of it has been with Treasury, but though with different organizations. So previously, I was employed with Kraft Foods, which is currently Mondelez. Again, in the Treasury field, I worked also into a petrochemical sector, Octa Petrochemicals. Prior to the Dahra, I was with myself Futtaim, again at the holding level, at the corporate treasury. And currently, I'm basically running the treasury department at Dahra at holding level. That's it from my side.
Thank you so much, Mr. Vineet. Mr. Naresh, I guess same question for you. Same, if you can kindly introduce yourself.
Sure. So again, it's great to be joining this conversation. I'm quite interested by referring to my career as a journey. Part of me thinks my journey is coming to a close. I've done about 33 years in Treasury. First job was at BP Finance in 1988. And during my career, I've spent probably about half of it in industry with the likes of companies like Cable and Wireless, ICL, Fujitsu, but also a couple of spells in consulting, 3 years with KPMG, and about 9 or 10 years with PwC. In the advisory roles, I have spent a lot of time working with clients, helping them determine whether they should be centralized and decentralized. And I know we had a bit of a joke, Hassan, about this earlier, about what is vogue sometimes. Sometimes the trend is centralized, sometimes it's decentralized. And maybe one of the things is neither one is always right. And I think it depends, certainly my personal view is it depends on the organization and its own culture and journey. But I'll stop there.
Fantastic. I'm sure we'll cover that in more detail. But I guess, Vineet, what we'd really love to know is, as you've worked at Dahra, as you're working at Dahra Group, what's the journey that you guys have been going on now with regards to automation at Dahra? What are the challenges that you've faced? Any pitfalls that you can advise our audience on? I'd love to get your thoughts on this.
Yeah. So at Dahra, actually, we are into, there is a transformation projects going on, not only at Treasury level, but it's at each and every department of the organization. So the idea is to basically simplify and optimize. So basically, everything we would like to simplify and then obviously optimize. So that is happening in each and every area, and Treasury is no different to that. Treasury actually even started this project even before it was formally announced in organization. So the objective or what vision we have as a treasury is basically we would like to create a kind of a treasury where we have full visibility, because the Dahra currently presents around 20 countries around the world, from Australia to US, from Central and Eastern Europe to Middle East and Africa till South Africa. So it's really important that we have a full visibility of our cash, our debt, what is falling due, our covenants, very important, because we have got around many facilities. Dahra has acquired many business. So as a kind of inheritance, we got a lot of banking relationship, lot of facilities. So all this to manage, we need to have basically both things. First of all, we have to have a standardized process. So we want to have a centralized unit which is directing and guiding the standard process, which should be understood and followed everywhere in all the entities around the world. And also we want to have the right technology in place, so we don't waste time in, first of all, routine works which don't add value but are at the same time very important. So if they don't happen, we will have a breakout. But if they happens, they don't add any extra value, but it would keep the things going. So they are important but don't add value. So we want to automate them. We want to have full visibility. So this is we are on actually. So this, and then basically the biggest project which is going to happen for us is now implementation of treasury management system. This is a group-wide implementation of treasury management system. We are in the process. We have already shortlisted few provider. We are in process to basically shortlist one based on the specific demo, which I'm working on to prepare. And then we will go again. The same thing is happening on the debt reprofiling. How do basically we see where are the efficiencies, cash concentration, cash pooling. So a lot on the plate actually, I would say.
Fantastic. Well, I'm sure you got your hands full. And I guess from your perspective, Naresh, you've worked in multiple organizations as well as consulted on the topic. And I'm sure you've seen quite a lot with regards to automation. And my question to you is, what value have organizations been able to derive from such digitization and centralization projects?
Well, I think one of the most exciting areas for me is around payments and how payments are being transformed in many countries around the world. But I think there are some complexities around connecting to these new payment methods and institutions. And so I think that by centralizing and creating these centers of excellence, which may be in one place, maybe in a few places, what it does is enables, as Vineet said, this sort of concentration of expertise and reduction in risk, and really taking advantage of some of these opportunities that are now availing through. We talked in one of the sessions I was in this morning around the use of APIs. Deploying these sort of new technologies and new areas is much easier and easier to control if they're being coordinated from fewer locations. So I definitely think it's a real opportunity. Centralizing gives you the opportunity to benefit from the changes going on.
No. I think we may have lost Naresh there.
No, I'm still here.
Oh,
fantastic. Excuse me. Not opportune time to lose your voice. Excuse me.
I think you need to sip of water.
I could give one example once you're getting your voice back.
Go ahead, please.
When I was at PwC, I did a large project with an organization with offices in probably about 180 different countries. And some of these offices were involved in quite large payments, but others were just paying local teachers and training people on the ground in some really small emerging countries. And what we did is we moved the organization. It had previously moved from 180 field offices to 5 regional offices. And the project I was involved in was migrating those 5 into a central hub in India. And what they did is they went from, I think it was over 200 banking relationships to probably no more than a dozen, of which 5 were core. 5 were through which they processed all of the payments and receivables. And it meant that when they were using things like SAP, they could really harness things like auto-reconciling bank statements, accounts receivables. And it meant that they could actually take advantage of the technology that was around without having to train and deploy it across multiple locations and across multiple instances of SAP. So I do think there are some real operational benefits by concentrating some or all of your activity in just a few places.
That's fantastic. And maybe a follow-on question for you, Naresh, in regards to that. I mean, where and what situation does that not work? I mean, looking at regulation in certain places where, you know, controlled currencies, etc. How does regulation play into that?
Well, you know, regulation is something that is here to stay for all of us. And again, I think that by centralizing these things, it is easier to get a view across it. But I think, you know, first of all, when you have what regulations do is they require you to have some, you know, a greater or lesser presence in a particular country. One of the things that I've noticed here in the UK from a perspective is that banks and organizations could have managed before with having just a few people in what's now the EU 27 and the bulk of the staff in the UK. But now what we understand is that regulators are much keener to see real physical presence. That means real people doing real jobs with real management responsibility in order to benefit from a local presence. So I think it is a good point that local regulations, for whatever reason, however they arise, can impede your ability to have this optimal model of one place that does everything. But I think one of the things that I learned, that I was observant of in my consulting, and especially as I reflect on my industry time, is that success is really ultimately down to the people. If the people are not engaged and supporting the process, you can have the most centralized processes with the best technology, with some of the stuff that folks like yourselves have. But ultimately it fails if the people do not see the benefits and engage with it fully.
Which kind of segues very well into my question to Vineet is from the perspective of automation, what are the benefits that you have seen with regards to automation? And what are the major pitfalls that you can advise our audience on? Because obviously technology is great, but if not implemented in the right way, you know, it basically becomes counterproductive. So from your perspective, what do you see as the major benefits and the major pitfalls that you can advise clients on?
So benefits
or other treasurers.
Yeah, I think the benefits, I would say that employing the technology is not a choice. It's not a luxury now. It's a necessity, I would say. Because if you don't employ the technology available, so you might be lagging behind as compared to your peers. So technology is available at your disposal. The key here is basically to choose the right technology which works for you. That is the first thing. So if you basically just choose a generic solution, you might end up something which doesn't work exactly as you want. And second thing is that you might end up incurring more cost of getting a customized reports and all those stuff. So I think at the beginning itself, first of all, charting out the scope, what exactly is your organization need, and then basically having a specific demos based on those needs would really give you an idea that which technology is going to fit for and work for you. And so that's why I never basically go for a generic demonstration. I always go for a specific scenario-based demonstration, because let's say I will give an example of Dahra. Dahra has got huge volume of intercompany transactions. And that is not the case with every company. So what is my concern is that all the ICO settlements has to reflect correctly. It should be able to capture those ICO payables and receivable, and ideally group level it would be net off. What problem we face currently? Currently we are on the Excel, so we get these submissions from the entities. One entity says I will pay 10 million euro to entity Y. The entity Y says I will receive only 5 million. So this creates an unnecessary, when I consolidate, it basically artificially inflate or deflate my group cash, because one is saying I will pay 10 million, so it's a reduction of 10 million in their cash. One is saying I will only receive 5 million, so where is this 5 million? So these type of things, it becomes very, very complicated. The number of entities increases. So I think choosing the technology is very important. Technology can definitely help you. There are a lot of technology available which can help you automate a lot of things. Second thing I would say in the key, which I would, is that the technology should not work in silos. So there should always be an integration of the technology. So basically, if you have a say treasury management system, it is not linked to your Swift, basically where you get the MT940. Then you cannot get the visibility on your cash balances. If it is not linked to your ERP, you cannot process your payments. And even on the accounting side, if it is not linked to your ERP and you have not mapped your account, the GL account, the accounting doesn't get generated. So you do a transaction through TMS, and then you have to manually record in your ERP. You might forget, you do transaction. So if you book it FX deal today, you record in TMS, you forgot to record in your ERP, or you record in ERP. So I think the integration, the systems, the technology should talk to each other, because I think it's still not possible to have one system which covers all area of an organization. There are ERPs, but not everybody can afford them. It is hugely expensive for some of the organization, and also it takes you long time to implement. I will give you one example in Dahra, which recently we did, which includes centralization as well as automation. It's very, I would say, basic thing. It's not a huge project. We did a cash concentration within UAE. So what was the situation previously? I will tell you. We have around 6-7 entities, subsidiaries in UAE. All of them had separate bank accounts. So at any point of time, we were having a pocket of money lying with each subsidiary on daily basis. And the float was adding up to almost 100 billion at point of time. So ideally, and then there were entities which were even using overdraft. So one entity is having a lot of cash and other entity is using overdraft. What we did is we did a cash concentration project, which basically concentrate all the cash into one account at holding. And then we put a master OD account on that. So the entity who is using OD will use OD, but my cash, which was lying idle to other entity, would offset against my. So this was a centralization thing, which actually estimated saving from this is going to come around 2 million dirham per annum. Now this is the this is centralization part, but there was a resistance. The resistance is that where it says, okay, where is my cash? I cannot see. You sweep my cash. Can I use it? And basically second thing, so entity was like kind of paranoid. Oh, how you can sweep my cash away, and how do I do tomorrow? And then so it was to be explained to them that your cash is with you, it is swept to the holding, but you have a limit. So there's a dynamic limit created. You can spend up to that limit and it will be pulled back from holding. This is the first thing. So your cash is not going out. So they had the visibility. So technology provided them the visibility that my cash is not going away. It is still available to me. Second thing is that on the automation is that we link the accounting, because every day you have sweep in and out. So 7 entities, they are saying every day I have to pass this many entries again. So at holding level, 14 entries per day, entity level, at least 2 entries per day. What we did is that we have received MT940, and based on that, we have automatically generated the entries which was posted in the ERP. So I think if you want to run a project, you have to have technology, because otherwise you might overburdening with the number of transactions and all this happening. But choosing the technology right, and also having an integration between the technology doesn't work in silos, is the key. Otherwise, it would create even more friction than what you were expecting to have a smooth sailing project.
Thank you so much.
Husam.
Very, very detailed. Go ahead, Naresh.
I was going to just sort of share a sort of slightly different observation. I know Vineet talked about how it's important to not take a generic product, but to customize it to what you need. Some of the best projects I have seen have been the opposite, where companies have changed their processes fundamentally, a lot of what we've done as treasurers is a lot of it is around managing the cash. As Vineet said, how do you manage cash in multiple locations, in multiple currencies, management of local cash with overdrafts in other places. And I think there's a risk that the more we customize a solution, the more complex it becomes. And I'll share one example. I know a client in the UK who implemented a very large TMS. It cost them over £1 million. It was linked into Oracle. When Oracle upgraded to, I think, version 12, either this TMS could not be upgraded to link into Oracle 12, or the cost of upgrading was significant. We came in, we did a review. They ended up replacing that with a £50,000 TMS that did a lot of what was needed from a simplistic point of view. And so I think organizations need to understand the pros and cons of either changing their processes to make them easier to fit into a more standard process that exists, but making sure they get the balance right. Where they do have, as Vineet said, if you are very big on a particular type of activity like intercompany, you've clearly got to make sure that the system you buy is capable of delivering those requirements. So I think it's, again, rather than one size fits all, it's about being clear how much do you actually change and how much do you expect the software vendors to change. The only other thing I would say is that given how fast the technology is changing, and we've heard already about things like the work and the role of APIs, how open banking is changing how people access and process data. I think what people should be thinking about is not long-term projects anymore, but much relatively short sprint programs that can take maybe 3 to 6 months to deploy. Because if it takes too long, there is a danger that the technology would have overtaken what you're delivering. I'll stop there.
Fantastic. We've got a few questions on the topic that have just actually come up, and one of them for Vineet. How does going for a customized tool help with you sticking to best practice processes, which is, I think, very relevant?
Yeah, I would say very good question, actually. So basically, idea is not to ignore the best practices, and this should not be the idea. Basically, obviously, whenever there is a best practice available, and obviously, I hope the provider who is basically offering you a solution would come up with a better solution than what you are exactly using. The idea is here is that each company operates in a different way, in the terms of that even in the reporting requirements are different for different companies, correct? So they want to, certain management wants to see a particular report, and then other management would want to emphasize on a different type of report, different content. And ideally, the system should be able to handle and be able to there should be flexibility to basically move around. Because I have seen in my previous experience, there were systems which were so rigid that if you want to add another column in the report, or if you want to add a different information in the report, it would cost you $5,000 because it needs to be developed by their developer. You cannot do it. So reporting, this is the one aspect. So that's what I'm saying. Basically, when you say the customized thing is basically, what I'm saying is that the flexibility for the system to adapt your requirement. So it should be able to adapt to what you want to basically get from the system, and also be able to cater your existing need and your future need. So this is what you have to capture in your RFP, that what you want currently, and in going forward, what do you see as your treasury department to be? And accordingly, you choose a system which serves currently and also at least for a foreseeable future. So this is the idea behind customizing. Getting a system customized to your need is basically, I would say, it's more on the flexibility side, because system should not be so rigid. So once you get something and you cannot change it. Same thing if I say on the Naresh example, where they linked it to Oracle and Oracle gets upgraded, this system cannot now talk to Oracle. It creates a huge problem for that. So all those things should be taken into account when you select that system is flexible, it can upgrade accordingly. And currently now there are so many things like API, so multiple system can talk to each other. But obviously the technology is ever evolving stuff. So no matter how much you want to capture, you would still be in a situation where you might have to, you will come across that, okay, now this is a little bit of not what we thought of.
Great. Which brings us on to the, next two questions, which I'll try and combine in two for time's sake. What are the must-have technological tools required to operate an efficient treasury operation? And how do you transform your treasury from an automation perspective while limiting costs? And I think this is quite a touchy subject, specifically on the corporate treasury side. Cost.
I think corporate treasury, yes, because it is a explicit cost, I would say, because you see that there is subscription fee of whatever $1,000 or whatever currency it is, which was never there. And then all of a sudden you bring this system and then you start paying this thousands of dollars every year. And what is the value about it? So it is very difficult to justify, or at least I would not say very difficult, but it is very important to justify and clarify that what it would do. So I would, sorry, if I was to answer this question or it was for Naresh, I just started without.
No, it's go ahead, please.
So basically for me is actually the cost is always exist. If you don't have a system, you would have people working for it. So I will give you an example. 20 subsidiaries in different time zones just to get a cash position, for group wide cash position, what the cash we have in which thing, it takes a while for us.
Hello. Naresh, you there?
Yep, I'm here. Let me pick up on a couple of things.
Go ahead.
I think what's great about this current generation of treasury folk compared to when I first started out is that rather than having to go to a technology vendor and buy everything, you can be a lot more choosy about what you buy. So, for example, I would have said Refinitiv, now I'll say LSEG. Got a large portfolio of technology solutions out there. But what I'm hoping is that no longer do I need to buy everything from you folks. I can pick and choose what I need. And we live in a world where there's much greater interoperability between different services and different offerings, different price points, different types of global coverage. And so I think what is great about this question around cost is that it's much more controllable by the customer in a way that it wasn't before. And I think that, as we all know, cost is only one part.
I was disconnected. Sorry. Continue, Naresh.
No problem. Cost is only the sort of physical cost of the technology is only one direct part. As Vineet, I think, was saying, part of it is that if you can reduce your headcount, that's a saving in people. We know that one of the great things about one of the downsides of having people is we are prone to manual error. So from a risk perspective, it is a much better place to have automation and technology delivering more straight-through processing as is possible. So I think what the technology does is it creates a platform that enables organizations to then manage where they have their teams, what things they do, and we live in a world where they can be much choosier to get better value for money. So I'm going to stop there because I think Vineet, I'm sure, has got more thoughts on it. But I do think it's a great time to be a treasurer because we can beat people like you up much more easily.
Okay. Vineet, I don't know if you want to pick up where you left off. Maybe one part of that question that probably needs to be answered is I mean, what is the tool set that you need, obviously, in terms of tech? What are the tools that help you do your job and centralize and automate efficiently? I think we may have lost Vineet again.
So again, maybe if I just pick up on that, I think the tools, there's such a wide array of tools. I think for simple companies, their banks can do a lot of FX for them. There are plenty of automated FX portals. I know you folks have got one that allow you to collect exposures from around the world at, with portals that cost not very much. So, I think you can get a lot with tools like Excel and actually bolting on some of these platforms that are available for either nothing or at low cost. So I think that depending upon what you want to automate and what you want to centralize, you can do it actually for not a lot of money. And I think, the impressive thing, but then you can go to the other extreme. I worked with a sort of FTSE 30 company. They had a fully integrated straight-through processing system. But what they did is when they had to do an FX deal, it would come off their dealing portal. Two people would sign it, would then type it into the payment engine. And if it was above a certain threshold, they'd need to print it out and get it signed by somebody else. So the technology is only one thing. Getting the people and the culture involved and supporting centralization, automation is just as important.
I have a question that I guess kind of relates to, I think, something we haven't actually covered. Coming from the audience is, hi speakers, many thanks for sharing your views on technology and how it correlates with the TCO reduction. My question is that the trend I've seen is that the focus on investing in post-trade technology, treasury management system and ERP. But how about pre-trade analysis and trade best execution? Why do treasurers prefer voice trades or single bank portals versus an aggregation tool to find the best rate?
Sorry, if I get the question right, I don't know. It's saying that single bank portal is preferred?
No. The question is related to a lot of the technology we're talking about is a post-trade solutions, treasury management system, etc. Okay. From a pre-trade aspect, what such as trading tools or market insight platforms or something like that, why do treasurers prefer voice trades or single bank portals versus an aggregate? And I guess this would also combine in with your closing remarks.
I would say I think both are important. I will tell you one thing is that the pre-trade, especially for corporate treasury side, pre-trade information is not only about market intel. Obviously, you have to be up to date to the market, where the market is moving, and then accordingly you can take. So you have to have system which provide you the market intel for sure, and which is irrespective of whether you have TMS or not. Even if you are working on Excel, you have to have the market intel. You cannot avoid that. Whether it could be a terminal like Refinitiv, Bloomberg, or it could be your banks providing you information about what is happening in the market, or you basically go and check on some website. So that is irrespective of you have a TMS or you have an Excel. Now, from corporate treasury point of view, I would say that TMS even works as pre-trade, because TMS provides you information about what currency cash, how much cash you have where. So it gives you visibility, what FX exposure you have with which subsidiary, what interest rate risk you have currently. You can have run scenarios and all those stuff. So your exposure is coming from the TMS, what you are exposed to in which risk. And then you go to the trading platform or wherever and you do an execution to hedge that risk. But obviously, you cannot just wait to get the exposure and then go and look at the market. The market, you have to remain up to date, I believe, what is happening, what direction it is going, and how it can impact your organization with the changes it is happening. So this is basically, I would say that both are important, and nothing comes first and after. I think it goes parallel.
Thank you, gentlemen, for your time today. I really appreciate the candor to the dialogue. I'm sure the audience also appreciated it. Thank you so much. We tried to answer all the questions. Unfortunately, we were not able to do that, but thank you all so much for your time. I hope it was enlightening. I hope it was educational, and I believe most of us here are available if you have any further questions for us. I'm sure you can reach out to us on the ACT portal, and we can chat. And thank you so much, gentlemen, for your time.
Thanks, Husam. Thanks, everyone. Thank you. Bye-bye.